In this video, we will talk about Foresight Autonomous, trading under the symbol Frsx. We will talk about how the company is doing, what are the market reactions, and if you should buy the shares. Foresight is an automation startup that is specialized in vehicle automation. The company has been around for a couple of years, and its stock price had highs and lows. Ever since 2020, the idea of being able to sit in a car without having to drive it has been more present in people's mind, especially with the takeoff of EV sector. Although, as we will see later, I would say that there is more a correlation instead of causality. The company itself is a little bit like a battery company in the sense that they profit from the increase in interest and investment in the whole sector, regardless of which manufacturer wins. The company has recently published in a newswire that they have signed a partnership with a major Japanese car manufacturer, and this has contributed in giving the company additional layers of legitimacy. From around $2 in December of 2020, the stock has since then reached a peak of $10 before correcting back to the current level of $8. The main appeal of the company, in my opinion, is that the technology it develops corresponds to what the market thinks the trend will be, and the expectation of the market that large auto manufacturers will be partnering up with it and send it royalty revenues. I think at this point it's important to take a step back and determine which kind of investor this stock is designed for and how to approach the company overall. When we look at the stock chart, the first thing I see is that the significant jump in the company's share happened in recent months, much more recent than the EV frenzy that we saw throughout 2020. This means that those two tendencies may be complementary, but I think that the correlation is an indirect one. It is true that the market is more interested in vehicles in general, and the idea of innovation and energy transition. This is why many companies that heavily emphasize on disruption, innovation, and automation have attracted people's attention over the past year or so, but at different pace. Essentially, I think that the demand for this technology is present, at least in the current period of time. In the long run, increased automation is probably going to be the trend for the entire automobile sector as a whole, allowing people to be more comfy within their vehicles and arguably increasing safety on the road. There are, of course, some risks that are necessary to be brought up. The company offers technology, a piece of a larger puzzle owned by other market participants. We have seen those companies taking off before, especially in the LiDAR area with a company called Luminar. When it first went public, many people were betting on partnerships with other manufacturers. However, very quickly, major companies such as Tesla and Nissan stated that they will either use other technology or they will develop it in-house without partnering up with external companies. Since then, the stock price of Luminar remained stagnant, and it was never able to go beyond its peak many months ago. There's a certain degree of risk that the same thing may happen to Foresight, and this should be considered when structuring the trade. My recommendation is to buy the stock and keep around 30% of the position for long-term holding, while the rest is traded in swings. Due to the risk mentioned above, along with the possible capital migration to other sectors once the world economy reopens, I think that the companies where there are significant hypes and expectations may deflate a bit by the end of 2021. This is why I think that it is unwise to focus mostly on the long term now, given how the market is in an abnormal state. I think that in the upcoming weeks, the stock may push higher to at least the previous peak, and probably go beyond as well. It is difficult to say how far the current push will go, but I would say that the current swing will probably take about 3 to 4 weeks to fully develop. By then, if there are signs that the trend will break, then it would be time to lock in the profits. As far as the long-term tendencies are concerned, I think that it will probably be binary. The company will either prosper by securing more partnerships or be purchased by a larger company with a premium, or it will deflate because most manufacturers decided to develop the technology on their own. Regardless of the scenario, the unknown factor is significant for the time being, and this is why I would recommend to focus on the short-term swings for the moment. At the same time, just in case that company really takes off, I would recommend to leave a small portion of the position for long-term gains, if any. Due to the timing and expected volatility in the stock, I would recommend a maximum exposure of 2% of your portfolio. Thank you for watching. If you like my comment, please like, comment, and subscribe to my channel. Also, please check out my channel for more stock analysis videos.